US stock market staged a rebound, with all three major indexes closing higher as risk appetite improved significantly. The impact of tariff policies was gradually digested, and AI computing power and software sectors rebounded strongly. Capital flowed back to growth sectors, pushing the market to fluctuate upward. Technology stocks became the core driving force of the rebound. Overall trading sentiment improved notably, and trading volume remained active. Next, at the close on February 24th, the Dow Jones Industrial Average rose 370.44 points, or 0.76%, to 49,174.50. The Nasdaq Composite gained 236.41 points, or 1.04%, to 22,863.68. The S&P 500 advanced 52.32 points, or 0.77%, to 68,907. All three major indexes fluctuated higher after opening and maintained strong performance in the afternoon. The continuous strength of the technology sector boosted market sentiment. Capital inflow willingness increased, and the market presented a broad-based rise pattern. Sectors showed a comprehensive recovery trend, with the technology sector leading the market, and semiconductors and software sectors performing prominently. AI computing power-related stocks strengthened sharply, with AMD surging more than 8% and Nvidia closing slightly higher. The chip industry chain was active across the board. Software stocks staged a repair rally, and market expectations for the coordinated development of AI and software industries warmed up, driving a collective rebound in related sectors. Financial and consumer sectors rose simultaneously. Defensive sectors performed relatively steadily. Most Chinese concept stocks moved higher. New energy vehicle chain stocks led the gains, and structural opportunities in the market spread comprehensively. On the macro front, market expectations gradually became clear after the implementation of global tariff policies. Concerns about corporate profit pressure eased, and investor risk appetite returned. Federal Reserve policy expectations remained stable. The market's judgment on interest rate trends became rational. US bond yields fluctuated slightly, supporting stock market valuations. Global economic uncertainty showed signs of easing. Risk aversion cooled down. Capital flowed back from defensive assets to risky assets, promoting valuation repair of growth sectors, and the market trading focus returned to the development prospects of the technology industry. Commodity markets diverged from stock market trends. Safe haven assets pulled back slightly. Crude oil prices moved lower, and precious metal prices declined. The improvement in market risk appetite suppressed the performance of safe haven assets. Demand expectations for industrial metals improved with relatively firm prices. Foreign exchange markets fluctuated mildly. The US dollar index rose slightly. Non-US currencies narrowed. Capital flows tended to risky assets, and the overall market style turned positive. Looking ahead, the US stock rebound trend is expected to continue, and the technology sector will remain the core main line of the market. Tariff policies and Federal Reserve policy developments still need close tracking. Short-term market volatility may converge. The valuation repair space of growth sectors opens, and defensive sectors perform relatively steadily. Operationally, it is recommended to moderately increase risk appetite. Focus on AI, semiconductors, and software in the technology sector. Pay attention to recovery opportunities in the consumer sector, and dynamically optimize the position structure combined with policy and industrial data.